Hi, hello, good afternoon. Today it is June 8th, 2026. It's a Monday, first day of the week, and markets are down. Not terribly down, but Nifty is down by about 0.9% as we speak. It's about 1:45 p.m. And small cap is 1.36% down, and mid cap is about 0.9% down. IT is also getting hit with the AI and all those things. Its IT index is more than 1% down. So, if we are to state one reason, it is Middle East tension for the market downturn. So, as you all know, the war is going still continuing between Iran, Israel, Lebanon, US. All those things are one is linked to another. Sometimes now I think even US is not able to stop Israel. That's what going on, because of which Brent crude, war, let it go on. I mean, Ukraine Russia war is going on, we are not getting affected. However, Brent crude oil prices have shot up by 4.68%. Last week it was about 94, 95. Today it is about 97.5. Then the dollar to rupee, dollar was appreciated, sorry, rupee was appreciating. Now, after this issue, again cropping up of the Middle East tension, rupee is depreciating. So it has depreciated by about 72 paise. Last week it was below 95. Today it is 95.62, about 0.6% down. Rupee is down. And also, last week US jobs report came and it was pretty good. So if it is a good news, then it should be digested well. But that good news is also bad for the interest rate environment. Interest rates, when job market is good, interest rates will remain high. So that is the relation. And people are talking about higher for longer, higher interest rates for longer periods of time in years. If that happens, then all the money will get eroded from emerging markets and will move into US market. So if interest rates are higher, then why they will take risk elsewhere in emerging markets? Let them get 4, 5, 6%, whatever in US dollars, and they are very safe. They will remain there. Once interest rate starts coming down, then they will take that money out. So that is getting impacted in Indian markets as well. Foreign institutional investors are selling and taking the money to US. And last week, Friday, the Nasdaq was down by about 4.18%. S&P 500 was down by about 2.64%. And that impact is being heard today in South Korean market, Indian market, everywhere. South Korea, it's minus 9% down. Kospi, as we speak, it's minus 9% down. Nikkei, it's about 4.4% down, which is Japan's index. Taiwan, 3.6% down. So world over markets are down. In India also markets are down. So the major industries that will get affected include, but not limited to airlines, paints, chemicals, fertilizer companies, oil marketing companies, FMCGs, and all other fuel sensitive segments. So this will, that's why the market is being hammered. But having said that, now as soon as the Middle East tension goes off, immediately oil prices will come down. Already oil prices have cooled off, so it is a work in progress. That's what I should say. So as soon as oil prices starts cooling down, Indian markets will start performing well, because it is the highest import bill that we are paying for the oil. So continue with your SIPs, continue with your investments. These bad times are good for long-term investors. So stick to your investment plan, talk to your advisor, you know, take informed decisions. See you in another video. Thank you.